Welcome to the Hog Market Talk podcast, your weekly deep dive into hog market fundamentals, breaking news, and industry insights. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
All right, today is the 17th of June. I've got Luke Wells with us here today to talk about the hog market. How's it going, Luke?
It's going great, Mike. How you doing today?
We're doing great. We're going to talk about a list of different items here, but let's just get started with a few different things that you wanted to focus on in today's podcast.
Yeah, I suppose a hog podcast will start with the hogs, and I honestly, we're demand has been disappointing, right? And that's not like just happened yesterday type thing.
No nice
Mike.
way to say it.
You know, I'm just a little fatigued in how our pork's performing against in this environment, and so forth. The futures have traded it. So I just get into a few things. I mean, hog harvest. We're not coming into less pigs. In fact, last week was above a year ago. This week above a year ago. I don't have a slide on it, but pigs are heavy. It makes sense to make them heavy. So we're putting a lot of pork on the market. So, I suppose that's the upside. We're still moving pork at $95, right? We've failed. In fact, I mean, it really started to change about in May. May's the inflection point. So as we take a kind of look at that next slide, I think year over year, we're like $24. I think is the number under a year ago. You can look at that blue line to the green line. Like we were tracking along really well the first part of this year. But then kind of May hit, and I think there's some things working against us here that hit it. But pork it's lost some traction, and we're significantly weaker year over year, and it's why we've drugged the front end of this curve, and the deferred's down. So as you stick into the next slide, these two primals have kind of been it's kind of the near term culprits. All the primals are a little soft here now, right? But belly demand, bacon demand, it's not going anywhere fast. Continue to hear things. The food service is soft, Mike. Less featuring of breakfast items, less bacon on cheeseburgers, right? And also too, I mean, maybe we've been a little bit of our own worst enemy. We've been telling the market that we're going to be short pigs all year, and we haven't. So like buyers, they're real short bought. Meat buyers, they're saying, "Prove it to me," right? They're real short bought. Now that could work to our benefit if we get into a few less pigs here, which I have not completely given up on, Mike. For the record, we can see some pretty violent price reactions. I mean, as you look at that, when things turn on the hams or the bellies, they can move up pretty fast. But hams also, they're sub 80. We've heard some little extra hams around, kind of dumped to Mexico. So you got those primals not working. And the other primals that had been performing like 1 and 2 weeks ago really well, they've softened a little bit too. So we just got ourselves with a sub $95 cutout. You go down. So why? Everybody knows that's happening, but why? And I don't know that it's just one exact thing, Mike. I mean, I think it's kind of some attrition by several cuts, if you will. So Kate jumps to the next slide for me. I do think this is a big deal. And I think you'll maybe talk a little bit to where a state of Iran conflict is midweek here. But we've had inflation in a lot of different categories. Energy, fuel inflation has been leading the mark. You know how credit, you buy gas, you put it on a credit card, 30 days, maybe you pay it or you let it ride to 60, right? This goes back to 2023. The red boxes would be the summer period. I mean, we've got higher gas prices here that I think is pinching the consumer. And, pork's not been a winner in that environment. What are some things that have taken from pork just a little bit? Chicken. Go to the next slide. Take a peek at that. I mean, the broiler industry, they've responded to this opportunity where they're up like 2.7%, just about 3% year to date. Their price is going lower. Just kind of keep on clicking through there. Look at that top left. I think that's a really good slide to look at. So this would be wholesale level. Beef, really high. Now beef, I don't have a choice box beef on here, but it stayed around 400. So it's not rallied past that, but it's 400.
It's holding in well.
I think it's a proxy too from just a little bit of a stunned consumer. 400, right? But high chicken price, I said more of it. Price is going down, and pork we just maintain kind of this steady eddy. So take another click forward here. I like these graphs. These are distribution and price. I'm going to focus a little more on the distribution, but more noticeably, from the first of the year, start in the upper left with chicken breast, the velocity, the trend of chicken breast distribution, the blue line, it's up. Chicken wing, it's up. Beef, 90-40, so hamburger ground beef, up. Pork loin first of the year, down, right? We've been losing some share. And again, I think we kind of came under some price pressure. And with these higher fuel prices, a little tighter consumer, and we've slipped, producing not too much pork, plenty of pork, and we've slipped. So demand is definitely my biggest concern. I still haven't given up like all faith. I think protein demand in general is still good, but pork, especially since May, we've underperformed. And those are some things we're going to have to kind of work through as an industry. So just a few other comments here on the hogs. I think there's a few more slides. Now I've kind of been negative here on you, but we are hitting some technical support levels. This is the April 27 contract. 82's been holding it. That's a strong sign. Also, I think managed money is the next one up. We're like 24,000 contracts short. Record short's 36. Not that we
Getting close.
Not that we can't make new records, but we got a pretty big short book on. Commercial positions are up, right? Like some of those are triggering that we can find a bottom. I'd also argue I've kind of been harping on cutout at 95. I would think we'd find some demand at that kind of level. Exports have been good. To me, it's a domestic thing, right? Supply, while we've had plenty of supply, it's packer demand on cash hogs is good. Cash hogs are $98, cutouts 95, and index is 92, right? I mean, so it's not really a total supply problem, but we have not went under a year ago. I do think we'll get, potentially as we get a little further in the summer, we could get into a little bit of year-over-year reduction. I'm not a major supply bull, but I think that could still be a bit of a good guy. And then I think the last thing I'd say on the hogs, and I can't remember if we talked about it, Mike, last week or the week before, but like the trend hasn't changed. Not giving up on the summer rally, but it's July 17th. Half the summer's gone, right? If things change, they can change. But let's just say if we don't get this summer bump that was the futures all gave us a good chance to hedge, the futures forecasted, right? I would also say I don't think protein demand, pork demand is just like it's went all the way off the cliff. So we've been looking a lot at 24 kind of as an analog year. 24 is the red line up on the chart. We did not get a big summer rally in 24, but we had good prices all the way through the end of the year. So again, I think we need to, do, when we have good opportunities to be hedging them, but we are, especially as, get out into the deferred months, October, December on out further. We've got a little optimism from these prices. We're not, we're not drastically adding supply. We're still in a good spot, right? But here's short term. I guess demand has for sure stubbed its toe here. Let's hope it's not cut off. It's just stubbed right. We can grind some of that back. But pork demand's, it's a little disappointing here in the near term.
It's been a little disappointing, but we're seeing a few support levels. We're seeing a few things where some support could leak into this hog market, which I know a lot of us would say, hopefully it's about time here. So hopefully we can turn the tide soon.
Yes, sir.
A few of the other things we've seen are, you think we're wrapped up on the hogs here?
I think we're good on the hogs.
All right.
Bud.
So a few things I wanted to cover just on inputs, outside markets here today. Corn off to a pretty good start the last couple days. We'll see how we end the week here. It sold off a lot though. Now we're going into a 3-day weekend. So maybe it just had a few good days here going into the weekend. A couple different reasons, right? One, the funds had liquidated all of their long positions. They're actually net short in the corn market, so maybe taking a breather now after they got that risk off their table. Two, we took a lot off. Like I said, we pulled back to some very nice support levels around 440 corn. Historically, we don't want to go much below that. Same with meal, right around 300. It doesn't want to stay below that very often. A couple other things. The weather story's been played out a little bit here. Just we've had very good weather. We keep getting rain, so that was a bearish influence, but not much has changed. And then the Iran situation. This week on Friday, or the next couple days, it sounds like we're supposed to get a signing of the Iran deal. Maybe that's wavering a little bit here as we get into the end of the talks here, or this weekend with the signing potentially. The other thing is the clarity behind it. The signing with Iran. could have been a little bit more definitive. I would say it's basically a 60-day ceasefire, and it's nothing solidifying the nuclear front, for example. So it could have been a little bit more strict or a little bit more defined. So the crude oil market bounced back a little bit with corn and soybeans here as well. And then last but not least, probably the biggest reason why we found some support here the last couple days has been the soybean market finding a bid. Long story short, there are some boats of soybeans headed to China. That's kind of the reason for some support the last couple of days. Not a whole lot of details on it, but it is happening. So that's something to keep an eye on, and some of the reasons to watch these spreads as well going forward between kind of old crop, new crop, bull spreading action, anything like that, I think as well. Last but not least, if you just go to some of the outside markets, equities. We've had a really strong couple weeks here. We got excited. We had a SpaceX IPO. It was the largest IPO in history.
That was wild.
Money's been flowing into the stock market, and people have been excited about it. Taking a breather today, the new Fed Chairman Warsh stepped in, had his first meeting that he gave a press conference on. So he did come out. They held interest rates between 3.5% and 3.75%, so unchanged. But he was pretty hawkish. He came out and he basically said that they're looking at that 3.8% inflation number. It's running above target. That's probably a problem. So they want to try to use rising rates to combat that later on this year. Most of the people in the committee talked about we're probably going to raise rates by the end of the year. So the markets today priced in basically one rate hike by October from the looks of it. So a little hawkish news. The S&P pulled back pretty hard. NASDAQ, the dollar went up over 100 again today. So just a few outside markets changing things around a little bit after we've been smooth sailing here for a little bit, Luke. All right. Well, other than that, please click the link in the description below, and please check out our daily market commentary and other marketing info that you may find interesting there on our website as well at www.professionalagmarketing.com.
I'm going to say something too, Mike.
Let's kick it to you, Cade.
Yeah, I like that. We'll be at NPIC coming up in July. We'll be unveiling our new ProAg Power AI tool, so stay tuned, listen for that, and if you are at NPIC, please stop by us so we can introduce that to you. We're excited to show it.
All right, can't wait.